Shares of Apple at after-hours session highs. The company giving guidance for gross margin, but saying FX could impact revenue in June. CEO Tim Cook just saying, we view AI as huge, and we continue weaving it into our products on a very thoughtful basis. Fast Money friend Gene Munster of Deepwater Asset Management has been listening in. Gene, what stands out to you?
Melissa, let's start with the guidance. They essentially guided for revenue to be down 2% in the June quarter. The street was looking for plus 2%. As you mentioned, there's a 4% FX impact there. Sometimes investors factor that in, sometimes they don't. It's a guide down any way you cut it, and which begs the question of why is the stock hanging in there? Why does it continue to inch higher? And I think investors made up their mind going into this call that this is generally a good quarter, and specifically related to this installed base. And I've heard Tim Cook mention it once, Luca mentioned it twice. It's come up in a couple of the questions. And they said that it grew year over year. It was $2 billion last quarter. It grew 8% last quarter. They didn't give the exact number, 8% in the June quarter. But I just want to highlight this. They said it grew. Their device revenue is down, call it 5%. And that usually is a good indication that the people are holding on to their devices, getting more devices, and separately, old devices that are getting refurbished are going to new Apple customers. And that is the substance of a sleep well at night type of a business to own. This is why I believe that it should get a consumer staple multiple. So what's really stuck out, what is here is, again, the installed base number growing, and I think evidence that this is actually happening. There is a shift in terms of how investors are thinking about the Apple investment thesis, is they just guided down and the stock is hanging in there.
It's funny you mentioned consumer staple multiple. I mean, P&G's got practically the same forward PE as Apple at this point, Gene. On the conference call, what do you want answered still? What haven't we heard about? Because what caught my ear when Steve Kovac was outlining the results, particularly as it pertains to China, was that China was driven by these one-off sort of pull forwards, which won't be repeated in the current quarter. The gain back from the factories reopening, the gains from China reopening in general, that's not to be repeated, I would think.
Exactly. That was the negative in the quarter, is these are one-time benefits. But some of that negative, the reason why I didn't lead with that was that the guidance essentially answered that question about how much of that pull forward. It probably was 1% or 2% pull forward into the iPhone revenue growth. So iPhone would have probably been flat versus up a couple percent. So yes, that happened. But based on their guidance, it wasn't that big of an impact. So I think that is a secondary topic. What's on my mind is India. It's come up in a couple of questions. They've definitely highlighted. We're going to hear a lot about India when it comes to Apple. Just get ready for it. They don't break it out, but it's just under 3% of total revenue. Mainland China, they don't break that out, but I estimate it's about 12% of revenue. Cook's laying the groundwork that India can be big or bigger than China. So if all of your concerns, my concerns about China, at least on the demand side, they're having a lot of success, double-digit growth in India. That's a big deal because when you're a $400 billion company, you got to find large markets to go after. Mm-hmm. And after a decade, they're finally making traction in India.
But just to underscore the point, Gene, you see the revenue guide as a miss, down 2% year-on-year versus the estimate of up 2% year-on-year.
Correct. There is a 4% FX headwind. You can debate whether that's in there. Similar growth rates. They were down 2.5% in the March quarter because you mentioned Cook said on the call, or Luca said on the call, similar growth rates for the June quarter. That is down. The street was looking for up 1.5%. And again, I think that speaks to how the investor psyche of this investment thesis is shifting.